Welcome to TradeTheMBI.com. This is John. This report is for the 24th. Well, as you can see, we broke down to new lows, continued decay within that MBI readings from, the middle part of last week, and no real change at this particular stage. They bought off, back off the zero breakdown, and typical came right back up to where the zero is, trying to build a little support within there. But we did get that dip below the red line on the extreme histogram down here, and shakeout continues to be in the negative mode. Um, what we were literally watching for was the NQ as it gets ever so close to that 14,300 range that fills the positive extreme. So the bounce back from the NQ was pretty strong within that setup, but right at the 23%. So it becomes critical whether or not they can break above the 23% on that. And with the MBI readings, we're seeing pretty tough. The DOC, when you look at it, you see the positive short buyers. So a lot of that was some quick short covering in that, but how much sustainability it has, it's going to be a little bit tougher to gauge that is going to be enough to hold things. So we're probably likely to try and push up against those and see if they can capture some more short cover within it. But overall, still tough. And, the absence of any real negative outcome from international events has really caused um, to buy the fear. And that's typically the way it works with the market, where you think things are going to hell in a handbasket, and that creates a buy opportunity because I think there's just too much fear, and it gives great opportunity to jump in and buy up and force the short cover. So here we have the TLT. So treasuries, obviously way ahead of where the Fed is, and so not surprising that we got a little bit of back off on that one, and we probably will see a little bit more as the move goes back up towards that 85 range, which would still be way ahead of where the Fed is, but it's just an indication that there's being a significant amount of drawdown from capital capabilities for the market in general. And of course, everyone's going to be watching, economic numbers to see, is that starting to have a material impact. Oil maintaining itself above that mid 80 level is just problematic from a price standpoint, and also affects free cash flow as far as the economy goes. And that's as we've always talked about, it's not just the jolt up that gets you, it's the sustained level of increase. And that affects, the beginning of the year as far as consumer prices and those kind of things. And really, the second part of it is as we get here towards the end of the year, some of that early oil pricing, the really elevated price, you're now going to have suppliers having to repurchase at the more elevated price tags. And so that hits them in the second half of it. And that's something we talked about as was taking place in the summer, that as we got into the end of the year, those elevated prices would start to, really, it's a boon when you're, first selling at elevated prices, but when you have to start replacing inventories at those elevated ranges, it's tougher. Strange move from the euro. Again, we talked about this, central banks getting involved in this area. There's no real reason the euro would be jumping you're going to get these kind of anomaly setups. We've had the MBI magenta over yellow for the last couple of days, and so once it got to 23%, as an automatic little short cover, but again, still way overvalued for the conditions that are taking place in Europe and that. And you can see gold continuing its move. This is going to be a little bit of back and forth. This is quite a quick run. What you really have seen is the Bitcoin move, and that's been outsized and accelerated, and it's something we talked about. It was building as we came through, and then once the magenta got over, we had a couple of areas where starting to express a little bit of weakness, but then we got the positive MBI overweight there, and that led to the first push, and then it stabilized for a little bit, and now you can see it's off to the races for it, and not surprising. And the interesting one was that ETH was struggling behind, but has also finally caught up and accelerated in powerful fashion. So you can see a lot of people moving to the alternatives as they think that things are, um, particularly unstable, and that's a legitimate concern. And when we look at our 50K, you can see the degradation going all the way from like back here in the 18th all the way through here. And of course, we're getting close to that anniversary of the great October crashes. I don't see that on the line unless something breaks from a world war standpoint. So here you had the nice pullback up 50% range, and then we ended up with the white MBI lead, and that gave us a partial move lower. And right now we've got a little positive pop up right there. And it'll be interesting too, because if this is sustainable, you're going to have an improved shakeout with the breakout going along there, and that would be something that could be sustained. I mean, obviously, when we get the 100% dipping, usually you get a pull towards it, and the question will be, how far does the 100% dip before price catches up to it? Probably going to be somewhere in that 4270 range. So that's what I'd be looking at for at this particular stage. Intraday, it was pretty clean. We saw the early morning just decimation as it got down to that bottom area. There was a brief move back up to the 50%, made that second dip, and I was posting right in here that as the Nasdaq got closer to that, and we were only a few hundred points away at that point, positive extreme refill area, that the algos would kick in. And sure enough, literally right after I did that, we had this giant turnaround move, and that was what sustained pretty solid short cover. And then as we moved towards the end of the day, a lot of it got backfilled. There really weren't a whole lot of positive extremes, so just indication that there was just a lot of money available to keep purchasing, and whether a lot of that was short cover or not. And you're going to get that back and forth, because as too many hands get directionally positioned, it makes it easy to counter them, particularly those that can move things. And we look at the pre-market at this particular stage, and we're in a nice bounce back at this particular stage, getting back to the highs of what pre-market has been in the European session. So that's been enough to float things at this particular stage. So really, we're getting that back and forth that not unexpected, and still the bias with daily readings is weaker, but that isn't going to stop pushes, just the same as you would get in a long run where you get some fade back and then it just builds and creates more opportunity. We're just in the inverse of that right now. And again, potential, when you talk about oversold, given, the fear element of war, and if things don't accelerate and it's softer than the original thought, where everyone believed there was going to be some massive ground assault and things like that, that hasn't occurred yet. So if that suddenly did happen, I think you might see a change. So again, events like that, and with the Fed on the sidelines, I think that that's also bullish too, because it just means that the market doesn't have that to worry about from a constraint standpoint. But as always, I will update you on ScapChat with anything relevant. Have a good one. Trade well.